Welcome to our channel on mortgage insurance. My name is Glenn Cook and I'm with Only Insurance. This video is the second in our series on mortgage insurance. Today we're going to look at mortgage critical illness insurance versus term critical illness insurance. Over the next 4 minutes we're going to do a deep dive into the various differences between these two insurance policies. First, let's start with a basic definition. Mortgage critical illness insurance offered by the banks is a type of group creditor protection. The group part means that the policy is actually owned by the bank, not the consumer. The creditor protection part means that the insurance is tied to a debt, in this case your mortgage. Term critical illness insurance is an individual life insurance policy offered directly to consumers by life insurance companies, typically through a broker. You are the policy owner, so you have control over the policy. The term part of term critical illness insurance means that the premiums are level for a specific period of time or the term. In the case of the critical illness insurance offered at mortgageinsurance.ca, the term is 10 years. With the definitions over with, we're going to look at 3 primary differences between mortgage critical illness insurance and term critical illness insurance: price, benefits, and claims payment. Let's look at price first. It's an easy comparison, it's just numbers. It turns out that premiums for both types of coverage are remarkably similar. For a male age 46, $100,000 of critical illness insurance coverage, prices for an individual policy are around $75 a month. Mortgage critical illness insurance from the banks range in price from $68 to $72 a month. So in this head-to-head comparison, prices are relatively similar within about 10%. All other things being equal, we would normally suggest the least expensive. But in this case, not all things are equal. Which leads us to our second comparison, which is benefits. When it comes to benefits, mortgage critical illness insurance is absolutely deficient when compared to an individual term critical illness policy. First, mortgage critical illness insurance covers you for 3 conditions: heart attack, cancer, and stroke. By contrast, an individual term critical illness policy is offered at mortgageinsurance.ca covers you for 25 conditions, and as we saw earlier, at about the same price as the bank insurance. I'm going to read these conditions quickly just so you get a sense of the comprehensiveness of the coverage. In addition to heart attack, cancer, and stroke, like the mortgage insurance, a term critical illness policy also covers Alzheimer's, aplastic anemia, aortic surgery, bacterial meningitis, benign brain tumor, blindness, coma, coronary artery bypass surgery, deafness, heart valve replacement, kidney failure, loss of independent existence, loss of limbs, loss of speech, major organ failure on waiting list, major organ transplant, motor neuron disease, multiple sclerosis, occupational HIV, paralysis, Parkinson's, and severe burns. But that's not the end of it. Term critical illness insurance provides even more coverage. They have a smaller benefit called early intervention benefit. This benefit covers some of the less severe cancers for a smaller benefit amount. In the case of the policies offered at mortgageinsurance.ca, it covers you for 10% of the primary coverage amount to a maximum of $5,000. This coverage is paid out for angioplasty, ductal carcinoma in situ of the breast, early prostate cancer, and superficial malignant melanoma. On a personal note, I purchased a term critical illness policy on my kids when they were younger. At the age of 23, my daughter had a brush with superficial malignant melanoma. Her policy paid out a benefit under the early intervention benefit. No such benefit would have been paid with a mortgage critical illness policy, so this isn't just hypothetical. Next, in terms of benefits, let's look at the beneficiaries. With bank critical illness insurance, your beneficiary is the bank and is used to pay off your mortgage. With an individual policy, the benefits are paid to you for use however you see fit. This could be on drug costs or replacing income when you're off work. Lastly, let's look at claims payment, or what happens when you develop a critical illness. In this comparison, we don't actually have access to published numbers, so we're going to use common sense and our experience. Nevertheless, what I'm about to tell you has been documented by independent authorities such as CBC Marketplace. And once again, mortgage critical illness does not fare well in this comparison. Mortgage insurance uses what's called post-claim underwriting. That means that when you purchase the insurance, no underwriter actually looks at your application. It just gets filed and you start paying premiums. They don't pull the application to review it and decide if the coverage is valid until after you develop the critical illness. This is a huge cost-saving measure because instead of looking at everyone's applications, they only review those of the people who develop a critical illness and make a claim. Now, in a perfect world, that wouldn't make a difference. But if you're answering these medical questions with the assistance of your local bank staff, there's a pretty good chance that you could screw up. And when do we find that you screwed up? After you develop a critical illness and the insurance company looks at your application and pulls a doctor's report. That's the post-claims part. At this point, it's much too late for anything in the way of recourse. By contrast, with term critical illness insurance, you'll do a medical history interview on the phone with a trained person from a paramedical company. Next, an experienced underwriter will review all of the documentation and your history before the policy is even issued. If there's a mistake, they should find it and be able to clarify it before they even issue the policy. The end result of all that is that mortgage insurance policies have a much higher probability of denying claims than a term critical illness policy. So, there you have it. Term critical illness insurance wins hands down over mortgage critical illness insurance. It's got similar premiums, but has far better coverage and benefits and is more likely to actually pay out. If you'd like to look at term life and critical illness insurance to cover your mortgage, visit mortgageinsurance.ca. There, you can compare prices for different policies and actually apply right online through the website. You can go there now by clicking on the mortgageinsurance.ca logo at the bottom of this video. Thanks for watching, and we'll see you next time.